Hi, everyone. Welcome to the latest edition of the Sky Accountants podcast. My name's Jamie Johns and I'm the CEO. And I'm here with me today with Ashley Carmichael, who's one of our senior client managers and our CTO. How are you today, Ash?
I am excellent. How are you, Jamie?
Yeah, I'm good. I think it was a sigh of relief the end of the financial year for all the accountants across the country. And but now
Stumbling
we're
across the finish line.
exactly. And but back into it again, Ash. It's game on again, if that's the way to put it.
That's right. You get a very short breath, and then there's a whole bunch of new things that need to be done on the other side of end of financial year, isn't there?
Yeah, it's all into it again. So, but yeah, thanks for joining me today, Ash. We'll get started because we've got a little bit to cover, and we really want to give businesses out there and clients an update on some of their obligations and what they need to do this time of year. So, what sort of things should businesses be thinking of right now, Ash, with the new financial year just beginning in the end of the last?
Yeah, well, look, there's a bit of a flurry of activity that happens at this time of year. You know, we've just crossed over the 30th of June, and there's a number of things that need to be done to sort of tidy up that financial year and close it out. And so, you know, one of the key things that businesses need to be doing is finalising their income statements. You know, that's what people would sort of historically know as your payment summary or your group certificate. And so that's all
right.
That's all digital these days. You don't hand anything out to your staff.
The old days, we used to call it the group certificate.
Yeah, we're showing our age a bit, but that all needs to be done through the single touch payroll system, the STP system, and it needs to happen by the 14th of July. You need to do a few different recs and make sure it's all in order, but it's a pretty straightforward process.
Yeah. And is that done in most of the clients' software these days? Or?
Yeah, that's right. It sort of everyone needs to be using STP enabled software these days, and it's just part and parcel of that. But it's just important you don't do it, because essentially what happens is the staff will either go off to their accountant or get into their MyGov and want to do their personal tax returns.
Yes.
And they need to be marked as tax ready really before they get on with it, and that's sort of driven by what the employer needs to do.
No, that's right. And a lot of people will be rushing in to get their tax done if they can.
Yeah. And look, you know, we're seeing that in our business at the moment, but look, the ATO are certainly out there saying like, slow down,
slow down.
and look, they say that because, you know, we need things like income statements to be finalised and all of the other data that they collect, health fund details,
enormous
interest
amount
from bank accounts, dividends, a whole bunch of stuff. And what they know is that those people who get carried away and lodge a tax return on the 1st of July tend to miss a lot of stuff.
And then
they end up amending them. So they say, look, hold on, and certainly don't do anything until your income statement's marked as tax ready.
Yeah. But the other thing is too, Ash, I think individual tax returns, correct me if I'm wrong, some of them, depending on the client's circumstances or your circumstances, might be linked to Centrelink. Is that right as well? I'm not sure.
Oh, yeah. Lodgement of tax returns does impact people who are getting things like family tax benefit or, age pensions and all that kind of stuff.
Probably off the topic, Ash, but, there used to be talk about the tax office stopping or not having I returns or individual returns, but I don't see that on the horizon.
Look, there was some talk, it's probably a good few years ago now, where the idea of a standard tax deduction was floated. But it just didn't sort of go anywhere. I think, being on this side of the fence, I think people were a bit sort of a view that they were a bit miserly with how much they had proposed for the standard tax deduction. So people didn't like it.
Yeah. Ashley, I noticed we've got payroll tax and workers comp on there. Is there
Well, that's right. Yeah. So
thresholds with them?
yeah, that's right. So, businesses that are required to deal with payroll tax, they need to do an annual reconciliation, which is essentially, supplying all the detailed numbers and balancing up. The due dates of that vary depending on the state. And some of the calculations can get a bit complicated as well, where you are employing in multiple states.
I won't drag it on, but it's probably a good point for small businesses, for example, just to be wary of those limits, like with payroll tax, when you're required to register, if you like. So
yeah, it's just one of those things. If you've got a decent sized payroll, it doesn't hurt to either check with your accountant or Google it and just every now and then check that you're under the threshold, because we do see it. You would have had times, I'm sure, where you've seen it too, Jamie, where you get someone in and you say, you've tipped over the threshold.
You've tipped over the threshold. Yeah, you've got to be keep an eye on that for sure.
Yeah. And so, same with workers' comp insurance. And again, it's state based, so it's complicated, but certainly where we are in Victoria, it's aligned to a financial year, and you need to declare your actual wages, and they'll recalibrate your premiums and all that stuff.
The workers' compensation. And what's the other one there, Ash, that just explained to some of our listeners?
I'll give you the jargon and then I'll tell you what it is in English. So they call it the taxable payments annual reports, which is essentially contractor payments. So certain industries have a reporting regime that applies to them, where they've got to report payments that they make to contractors. To the ATO. And this isn't so much about the business, it's actually about the contractors, and it sort of goes back many years now to some work that the ATO did, where they found that a lot was slipping through the cracks. These contractors just weren't reporting their income, or not all of it. And so you're talking about the first one that was into the system was the building and construction industry.
I remember it came in.
Yeah, it was something like almost half of them weren't reporting all of their income. It was some obscene number, but according to the ATO anyway. And the IT industry, it now applies to road freight and couriers.
Well, it's really expanding then, isn't
cleaning it? Cleaning and security industry.
Wow.
You'll notice that, they're all industries where the use of contractors is quite commonplace. So those all need to be done. You need to assess whether you need to do it in the first place, and then get it done by the 28th of August. There's a
lot of compliance, isn't there? A lot of compliance for businesses, and I suppose that's why often they need our help.
Yeah. Well, and like that's all the what I would sort of call closing out the 23 financial year, but there's other things that they need to be doing on a go forward basis as well.
And what are some of those things, Ash, just like heading into the 24 financial year?
Well, a lot of it's sort of payroll or HR related stuff. So one thing that we've got, and people need to be aware of this more generally, that there is a programmed increase in the super guarantee rate, so the minimum super rate. So we've just moved from 10.5% to 11% on the 1st of July. So any payroll, any pays done on or after the 1st of July should be at 11%. But it's going to go up again July next year. It's it's all preset, and there's a number of increases. So, but first and foremost, just worry about now and make sure that your payroll is calculating the right super rate, because otherwise you're going to have a big headache.
You'll have a problem too. And
the other
go.
The other thing is that a lot of businesses, they either employ people who are covered by awards. Or they've got people that might be on or near the minimum wage, the national minimum wage. And so the Fair Work Commission does an annual wage review.
Oh, man.
It released that in mid-June.
Oh, right.
And if memory serves, I think the minimum wage has gone up about 8.6%, and all of the award rates
Yes.
have gone up 5.75%.
Yeah.
And so anyone that's got award employees
Yes.
needs to be going off to the Fair Work Ombudsman website and Googling pay guides
Yeah.
and getting the most current pay guide. They were just published last week, and they apply for the first full pay period
Yeah.
after the 1st of July.
Yes. Perhaps
And
we can put that on our blog or newsletter as well, Ash, that link to that perhaps to make it easy.
Yeah, that's a good idea.
Yeah.
And so that's a big one. You know, we keep seeing instances of businesses with high profiles having to come clean about underpayment issues, and it's really bad for business.
That's
Yeah.
right. I was just going back to the superannuation, Ash. Should some clients be aware of that superannuation cap as well with that?
Oh, yeah. Spot on, Jamie. So, you know, where you've got people who are salary sacrificing super, in particular, the increase in the rate could have an impact on their salary sacrificing arrangements. You know, the extra 0.5% could tip them over the cap.
And what happens if you go over the cap, Ash?
Well, they could have an excess contributions issue, which look, it's not as nasty as it used to be, but
it's taxed higher, isn't it? Is that right? Or
well, they essentially treat it as if it was personal income earned and not a super contribution. I'll spare you that, or spare our listeners the complexities, but you know, if you're doing it to bolster your super and to get the tax benefits from doing it, you're going to lose those tax benefits.
You'll lose those tax benefits. Yeah.
And so, you know, typically you don't want to exceed the cap. You know, 99.99% of cases, you do not want to exceed the cap. It's not a sensible thing to do. And so, you know, salary sacrifice arrangements need a bit of a tweak in some instances.
No, it's good advice for anyone listening about who's contributing to a super. But the other thing I was going to ask you, Ash, about, there's been a fair bit of talk about this skill and training boost and the technology investment boost. Tell us what that's about, Ash, for the normal small business person.
It's a bit of a saga. It was announced, both measures, and their similar measures were announced in the 22/23 budget, which was actually a ScoMo Liberal Party, Josh Frydenberg budget before the government changed.
Yes.
And it didn't get legislated at the time. And then, of course, the government changed and it was sitting out there in limbo for so long.
Yeah.
The government, the Labor government, eventually came out and said, we'll do that. But the legislation didn't go through until late June. So it's been really up in the air.
Yeah.
But it is through now. And what it is, it's essentially an extra 20% tax deduction for qualifying items.
Right.
You know, so for the skills, it's expenditure on training with eligible organisations. It can't just be like, I couldn't just say,
anyone.
I paid Jamie for a bit of a lesson on how to do a tax return. That would qualify.
It's got to be approved, does it?
Yeah, the tech stuff, it can be, it does cover, hardware and software, if I can be so sort of broad.
Yes.
And it also sort of goes back into the 22 financial year. So it was from budget night, any expenditure from budget night, which fell in the 22 financial year.
Right. I wasn't aware of that, but it's also right 23, right through.
Yeah. So if I get this right, I think the tech one covers expenditure up to the year ended 30 June 23, and the skills goes another year to 24.
Oh, okay. Yeah.
And so we're starting to see a bit more sort of user-friendly material coming out with the ATO now, but essentially, businesses need to be looking back,
Yeah.
when we're doing tax
23 work.
returns, to make sure that we're capturing all of the right expenditure and claiming it, because it's a nice little pickup in some instances.
So Ash, it's a 20% additional tax deduction on
that's right.
that type of expenditure. Yeah, well, you wouldn't want to miss that. That's a good point. Yeah.
So it is a bit complex, and it's really one of those ones which is basically talk to your accountant, and they'll help you to understand what's going to qualify and what won't, and then we can, as a sort of joint effort, review what's taken place to see
see if you can get the claim.
It's been really problematic in that, and it's one of those things that you would have liked to have really proactively used, in that, you might have said, if we're going to get this, we might put all of our people through XYZ training course. But because the legislation's been swinging in the breeze, we haven't had that opportunity. Although, we still have a year to run on the skills one. So, there is an opportunity there to be a bit more intentional about it.
Yeah, well, at least it's good to be on the the front foot with it, particularly just at the start of the year. And if people are coming in, getting their tax done and seeing their accountant, it's just something to park in the back of the mind. So
it's I'd encourage people to ask the question and just make sure that it's being properly covered off.
Yeah, exactly. And Ash, what about on the personal tax space? What are the watch outs there for the tax time? Of the ATO giving us any media releases or guidance on that for this year?
Yeah, look, the ATO call this tax time. They'll call this tax time 23. And essentially it's their big rush of people lodging tax returns, and depending on people's situations, their due dates vary. So all of our clients, so people who use a tax agent, which is essentially an accountant, they have access to deferred due dates. So a significant amount, probably 90% of our clients' personal tax returns are not due until mid-May 2024. Fair way away. But if you do it yourself, you've got to the end of October.
31st of October. It's been that for as long as I can remember.
The only time it ever changes is if that falls on a weekend.
Oh, right.
And so, but notwithstanding, a lot of people, do a refund, and they know it, and they're pretty keen to get it, and as they should. That we're expecting that to be very much the case with this.
Well, that's with the rising cost of living that we've had recently, and it's probably a point that there could be an additional rush for people to get that refund to help with the household budget, the groceries and everything else.
Or even just a holiday to escape the winter for those in the colder states like us here in Victoria. So But look, every year the ATO they publish sort of their watch list. It's usually sort of three things, and I can't remember the last time it actually changed. It seems to be the same things.
Seems to be the same every year. Like particularly rental properties, they say that they're going to keep a close eye on, isn't it?
Yeah, look, the usual suspects are personal work-related tax deductions. Rental properties, and they call it CGT, but really what they're focusing on there is so people who don't report capital gains that they make, and a lot of that is around cryptocurrency transactions.
Oh, is that what they're focusing on, I suppose?
So that's an issue for them, as well as people who might be claiming that something was a main residence and is exempt, but it actually isn't. And that sort of thing. But rental properties, again, it's sort of look, they find a high. What this is about and why they keep focusing on it is that they keep auditing people and they keep finding a really high error rate.
Oh, and the
So rental properties, there's two issues. And in fact, they're starting to do what they call a data matching program around it, where they'll be getting data out of property managers, so real estate agents.
Oh, I see.
But that might be a good thing, because that will come through in the ATO system and allow people to more accurately do their return.
Yes,
but
yes.
you know, there's two issues. They get people who are claiming stuff that they shouldn't. So they might be claiming a capital improvement item as a repair.
Oh, yeah.
They might be claiming interest deductions that they're not entitled to. So, you know, the classic one is that somebody, you know, redraws out of their investment property loan to, you know, buy a car or something.
Buy something private.
Interest that relates to that redraw are no longer deductible.
Yeah.
And the other thing that really gets them is where you've got properties that are on the short stay market. You know, Airbnb stays, all that kind of stuff.
Yeah.
So there's a couple of issues. So people not reporting the income that they're earning.
On those short-term accommodation. Yeah.
Or, you know, they're on that short-term accommodation, there's periods of time where they're using the property themselves privately, and they're not apportioning the tax deductions appropriately.
Yes, yes.
Which is actually a fairly tricky issue. But, you know, the ATO are very much focusing on that. So and the work-related expenses, you know, again, you know, the ATO just, you know, they review, they audit, they find a high error rate, and so they're just focused on it. And
they keep focused on it. That just on that, Ash, it's important to keep a copy of the receipts to substantiate.
Yeah, and look, that can be the real undoing. So there's two elements to it that they're concerned about. So one is, you know, is the deduction a legitimate deduction? You know, is it eligible? Does it meet the legislative test? And they do have issues with that, where people try and claim things that are not eligible. But the other bit that can sometimes bring people undone is the substantiation requirements, the evidence.
You need the evidence.
You need the evidence. And so you might have legitimately incurred an expense. It might meet the deduction requirements of the law, but if you haven't got the right records, you haven't got a deduction. And so that's really important. And where that becomes, you know, much more important now is with working from home, which obviously, you know, blew up. It became a very big thing during COVID. But it's, you know, post-COVID, it's still elevated. You know, a lot of people are working from home,
or they're doing a hybrid model where they're working part-time at home and part-time at work.
And so, you know, with working from home deductions, that there's you know, if you read the letter of the law, there's one way to claim it, which is to keep all your records and claim a proportion, an appropriate proportion of your actual costs. But that's fairly onerous and not really appropriate generally. So historically, they've always had an administrative treatment of, you know, you could claim it based on a cents per hour basis.
I remember that.
People will remember that got pushed up to 80 cents an hour in COVID. That's over now as of the end of 22 financial year.
Right. And what's the way forward then?
Well, they've released a new treatment for work from home, and it's a bit different to what we're used to, because it covers more things. So it's not just, you know, your electricity and that sort of stuff. It covers your phone and internet and some other items. And it's a different rate. But so they announced this, I think it was around March
this year.
But the really critical thing that people need to be aware of is, under the old method, you had to keep records to evidence you're working from home, but you didn't have to keep a full record for the whole year.
Yeah.
Now you do. So in order to claim this work from home,
Yes.
every minute you work from home, you need to have a record of,
Wow.
whether that's a diary record or a log or something like that, that you can produce to show the ATO all of the time you work from home.
Yeah.
And so what they're saying is that for the 2023 year tax returns,
Mm-hmm.
anything prior to this announcement, old rules kind of apply in terms of record keeping.
Mm-hmm.
You should and I think it's the 1st of March, 2023,
23, is it? Yeah.
you need to keep that log, if you will, of your work from home
Yeah.
hours, and people will need to do it moving forwards. And
Yeah.
you sort of
Yeah.
anecdotally hear things about people who would just kind of estimated, I did roughly 10 hours a week, and
Well,
multiply it out.
the
That
other
cut the mustard.
no, the other difficult thing is, they've brought it in, like you said, March or April, but I mean, the logic would tell me it's sort of nice to bring in on the 1st of July. So you've got a bit of a mismatch.
Well, the new system applies for the whole year.
The whole year.
Method applies for the whole year, but the record keeping requirements are a bit of a jumbled mess.
Yeah. Yeah.
But look, it's
yeah.
Obviously they were concerned that people have been taking the mickey a bit.
Oh, I see.
So they've sought to tighten that up quite a lot, but the record keeping requirements now reasonably onerous.
Yeah. No, that's right. Well, we've covered a fair bit today, Ash, starting in the 2024 financial year. And it really emphasises, I think, that if you need advice or if you need help, to reach out to our team to get the information that you need, because it seems to be not simple, and particularly, businesses as a whole, they really need that guidance, don't they, to get all their compliance done this time of year.
Yeah, well, that's right. And accountants are often known, particularly at this time of year, for all the tax stuff, doing tax returns. But, you really need an accountant that thinks much more broadly than that and is across things, because, particularly as a small business owner or even an SME, you need essentially good people behind you to, guide you. It's about, not falling into any holes, not missing things that you're required to do, getting in trouble. But it's also about, well, what are the things that, what are the opportunities? What are the things that we should be having a look at?
Yeah, that's right.
And there's so much to know. It, as a business, I can't even talk. As a busy business person, it's very hard to be right across all this stuff.
Yeah. Now, well, thanks for your time today, Ash. And I just want to emphasise for anyone listening to reach out to us, and Ash and the team can certainly help with all the topics that we've covered today. And we've got our website there, and also our email address and phone numbers listed. So thanks for your advice today, Ash, and we'll see you in the next episode.
Thank you. Always good to catch up.
Yeah, it's
we'll see you next time.
It's riveting tax, and that's a habit at Sky. Yeah. Bye for now.
Thanks.
Bye.